Natural gas futures saw substantial volatility this week, ending with a near 5% decline. The market struggled with fluctuating weather forecasts, storage issues, and technical resistance, which contributed to a largely bearish outlook. The week started with high expectations for increased demand driven by hot weather across the western, central, and southern U.S. However, as the week went on, forecasts shifted, indicating milder conditions in key areas such as the Northeast and Midwest. This change in the weather outlook dampened demand expectations, particularly as the summer cooling season nears its end. A key factor contributing to the market's bearish trend was rising concern over natural gas storage levels. The Energy Information Administration reported a larger than anticipated injection of 35 billion cubic feet for the week ending August 16, exceeding market expectations of a 25 BCF build. This higher than expected increase intensified fears of a potential supply glut as the market moves into the shoulder season. Despite recent production cutbacks by major players like EQT and Coterra Energy, the market is still wrestling with oversupply issues. Production in the lower 48 states has dropped from July's peak of over 103 billion cubic feet per day to around 101 billion. At the same time, LNG exports, which were briefly disrupted by Hurricane Beryl, have recovered, further complicating the supply-demand balance. The nat gas market seems set for continued bearish pressure in the near term. With summer demand waning and storage levels ample, prices may struggle to gain significant upward momentum. However, several factors could still influence the market's trajectory. Weather patterns remain unpredictable, with the possibility of late summer heat waves temporarily boosting demand. The approaching winter heating season could lend some support, but this will largely depend on weather forecasts and global demand dynamics. Expanding LNG export capacity in the coming years may tighten market balances, potentially bolstering prices in the medium to long term. Overall, while the short-term outlook appears bearish, the nat gas market remains highly sensitive to rapid shifts driven by changing fundamentals and geopolitical developments. Traders and analysts will be closely watching upcoming EIA storage reports, weather forecasts, and global energy demand trends for insights into the market's future direction. Throughout the week, natural gas futures struggled to breach key resistance at the $2.30 level. The market tested the pivotal support at $2.10 multiple times, raising concerns about potential further declines. If nat gas settles below the $2 support level, it will likely trend towards the main support at $1.90. Traders should be prepared for a market that could turn increasingly bearish in the short term. However, I believe we are in a phase where the market is attempting to find a bottom. Any short-term dips below the $2 support are likely to present buying opportunities for those seeking value. Looking ahead, a price recovery above the $2.15 threshold is expected within 1 or 2 weeks at most. However, considering the current market fundamentals, a bullish reversal beyond the $2.30 threshold seems unlikely in the near term. Please like, subscribe, and comment to support the channel. See you in the next one.